Looking for cash? We have the funds for you.
So what is a hard money lender? We're going to be talking about it here with Dustin and Suzanne. Thanks for joining us, guys. Brian Schroeder here with Faster Freedom. I got Dustin Hoog and Suzanne Luther with us from FasterFunds Lending. They are local hard money lenders. So we wanted to shoot a video about what is a hard money lender. So Dustin, can you explain what a hard money lender is?
Yeah, absolutely. So we are what I like to call common sense lending. It's a short-term loan that's asset-based. So we're lending on the deal, not necessarily everything else that goes to that, for you to acquire either a rental property or a house that you may be rehabbing and flipping.
Awesome. So why would somebody use a hard money lender versus just going to a bank or their local mortgage broker or whatever? Why would they do that?
Yes, well, the ease of it, with most local banks, you're gonna have to put down 20 to 25% on an investment property loan. So I think that's gonna be the biggest thing. So you're leveraging the hard money lender for quick access to cash, because a lot of investment deals, they wanna close yesterday, where a bank's not gonna close that quick.
So let me just follow up on both of those a little bit. So do you guys require your borrower to put money down, or?
It's totally based on the deal. So as long as they're buying it right and they're buying it deep, we can lend 100% of the purchase and 100% of the rehab.
That's a huge benefit.
Yeah.
There's not banks out there doing that, right?
No,
or mortgage brokers or whatever. Yeah, absolutely. And how fast? You mentioned you can work pretty quickly. So how fast or how much time do you need by the time when you get a contract, when you actually close on the deal?
If you're pre-approved, we can get you closed in like 3 to 5 business days. We can be that quick.
3 to 5 days.
Mm-hmm. Yep.
From when you got a contract in your hand to when you got your close, money's in the title company or whatever.
Yep. We actually just had a house that we walked yesterday, and it closes on Wednesday. So today is Thursday, and it closes next Wednesday, and we've already gotten everything to the title company, so everything is good to go.
Awesome. So what kind of what's a typical borrower for you guys? What kind of borrowers are you guys looking for?
Yeah, so we're going to be looking for, I would say, 2 types of borrowers, but the landlord that's really utilizing the BRRRR strategy, where they're buying at a discount, rehabbing it, and refinancing out to longer-term financing, or the rehabber that wants to flip properties and doing a lot, not necessarily the work themselves, but at least general contracting the work themselves, and has some of his own sweat equity in there as well.
Cool. So rehabbers and landlords for the most part. Okay. What are the costs associated with getting a loan from FasterFunds?
So again, a 6-month interest-only term. It's annualized at 12%. So that's 1% a month while the loan's out. Then there's 3% on the back end of the loan. So when you either sell that property or refinance in the longer-term financing, you'll pay that origination fee at that point.
Awesome. So is that pretty much standard for the hard money lending industry?
In my opinion, no. I believe most people are a little higher, and a lot of them require points up front, where we prefer to do it on the back end, which makes it easier for the borrower.
Cool. That is super cool that you don't have that origination fee coming out of pocket. It's coming out of the deal, basically, on the back side.
Yeah, it's a little misleading, because you say origination fee and people think, oh, it's up front, but we put ours on the back end. So
nice.
I feel like we need to come up with a new term for that. But
Right, right. Cool. So Suzanne, how would somebody go about finding a hard money lender in their area?
Yeah, so there's a couple different options. I think the best option is networking and going to your local RIA, asking other rehabbers and landlords that you really look up to who they're using. You can obviously also search on Google. You can post on your local real estate investment Facebook page and ask. But I genuinely believe you'll find the best lenders just by networking and talking to people and asking them who they use, and then just start calling them and asking them questions and seeing which program is best for you.
That's awesome. So what do you guys track how people find you? Mm-hmm. What are the top 2 or 3 ways that people find you guys?
Top one is borrower referrals. Our borrowers are big fans of our program. I mean, we've built the program totally based around them and their experience. So that's our biggest one.
I would think the RIA that we're associated with, that's going to be probably number 2. Big on social media. You know, I think being loud on social media with Facebook and things like that is always important. And that's what a lot of people use to ask for referrals, so then it just kind of syndicates from Facebook from there.
So Facebook's obviously the bigger social media, is that true? Is there any other social media that's working well for you guys?
We use Instagram a little bit. I won't pretend I'm an Instagram professional or anything, definitely not an influencer. But our posting on our Instagram page helps us with boosting it out to Facebook and just people seeing us on multiple social media platforms.
Awesome. So you guys talked that if the borrower bought the property right, you would lend 100% of the purchase. Would you guys lend any of the rehab money too?
Yeah, absolutely. If you're buying, it's all about buying it right. You want to buy it right for multiple reasons. First of all, your funding, you don't have to have any money down if you buy it right. But second, it means that you're gonna make money on the deal, which is really important. People always say that your purchase price, what you buy it for, that's what tells you if you're gonna make money or not on the property. So every lender's, what they're gonna lend up to is gonna be different based on your area. So that's a great question to ask the lenders that you're talking to. Hey, what percentage will you go up to for the ARV or after repair value?
So what do you guys do?
We do 70 to 75%.
Somewhere in that area, depending on the area or something, or?
Area, borrower qualifications, that kind of thing. Yeah.
Awesome.
Borrower
so you
experience.
basically make a loan that makes sense.
Yeah.
You're
Again,
kind of back to what
back
you guys
to the
said at the
common
beginning.
sense.
Yeah.
Yeah.
Common sense lender.
Yeah.
Why does hard money lending get such a, I hear that it's kind of got a misconception or a bad rap in general. What do you guys think?
Well, I'm going to say it's because of the mafia movies, and we were joking about that before we started this. But I mean, that's all the perception before I got into it. That's the only thing I knew about it.
Yeah.
It's not a. I mean, the reality of it is real estate investing is an unconventional way of thinking, and there's a lot of parts to investing in real estate. So if the head of it is unconventional, everybody else thinks the rest of it's unconventional.
Gotcha.
It's my opinion on it. But again, when you hear about hard money, it's mostly in the movies.
Yep.
It's loan sharks, right? And so that's probably
Walking around with baseball bats or crowbars?
Crowbars, yes.
Have you guys ever taken a baseball bat or a crowbar to anybody?
Just a few times, no.
All right. So I understand both of you guys are investors, as in you guys both have flipped houses, you guys both have rentals.
Yep.
Do you think that's typical for most lenders?
No.
Not at all.
No. We know the lenders in our market pretty well, and they're lenders. That's their realm. That's kind of the role they play. But for us, I think because deep down, our core is to lend on win-win deals. It's common sense lending where borrowers are going to win and we're going to win. So us being investors helps out a ton. I was at a house earlier this week, and the borrower had put down a budget of $25,000, and I walked through the house and I was like, I'm adding it up in my head, and I'm like, you're at 50. So I came back to the office, Dustin and I talked it through, ran numbers on our own. Sure enough, we both got to 50. So I messaged the borrower back and I was like, hey, we don't think this makes sense. Our rehab is double, but let us, let me know what you think. And she's like, well, my contractor hasn't finished putting the budget together. And then this morning she emailed me and she's like, you're right. Our rehab was 50. We're not going to make any money on it. So we just are always trying to keep an eye out for our borrowers too.
Yeah, that's actually a huge benefit to getting money from a hard money lender versus, especially one that's an investor themselves, versus like if you go to your local bank, are they going to know how to know anything? They're probably not even going to look at the house.
They're not even going to go to the house.
Right. Yeah. So let's talk about how the borrower gets approved. So is it difficult to get approved? What's the process like?
Yeah, so I mean, it's it starts with an online application, and again, could I keep on saying the phrase common sense lending. So the online application, then we're going to ask for supporting documentation from there. Supporting documentation is pretty simple. It's going to be your last year's tax returns for us. It's going to be your last 3 months bank statements. And the reason we want to see bank statements is because we want to make sure that you have some liquidity and reserves. And that's very important because an investor is going to have this thought of the budget's $50,000, and you'd be surprised how many times it ends up coming to be $55,000 to $60,000 to $65,000 because things go wrong. And when things go wrong in a house, most of the time they're expensive, right? So we want to make sure they have that liquidity in there for when things go wrong, not if, but when. And we want to make sure it's going to be a win-win deal. I can't stress that enough. It's, if you don't have money to pay your own bills when something goes wrong, you're probably not going to be able to finish the house, and you're probably not going to be able to win for this, and then you're going to have a bad experience.
Yeah.
So.
Do you care if they've like rehabbed houses in the past or have experience, or what's your thoughts, Brian, there?
Yeah, that is super helpful. Borrowers who have experience and just they know what they're doing, we're naturally going to be a little more excited to work with them just because it helps them out a ton. I mean, if you've already been through a couple flips together, whether it be on your own or with a partner, or you already own a couple rentals that you've already, burnt out and know how to manage, that experience is going to help you a ton. So you're also going to be more competitive when a wholesaler sends you a deal or you find your own deal. You're going to know what a deal is right away, and you're going to be able to lock that under contract immediately versus someone who's newer and doesn't have as much experience, who might be a little slower to pull the trigger there.
And I think something to say with that is we understand that you have to begin somewhere, right?
Yeah.
And we're going to talk through that this might not be the best deal to start on. Might need to be a little bit more cosmetic, some flooring, some paint, that kind of thing. And let's get through this and build up a team while you're learning at the same time.
Awesome. Do you guys get appraisals on all your on every property?
I am the appraiser.
You're the appraiser?
Yeah.
Nice.
So I go and I walk through every house because back to common sense lending and win-win, and the experience that I have as an investor, I walk through it and I feel like I trust myself and our team way better than I trust a random appraiser, because I can go through it and I can see your vision too. What types of finishes are you going to do, so that when we go back and pull comps, we can make sure that everything makes sense.
So if you're not doing an appraisal, I guess you don't have an appraisal fee then?
Nope, no appraisal fee. So always ask your lenders about fees. There's always going to be fees associated with a loan, right? You have fees when you get a bank loan, you have fees when you do a hard money loan. But we do not charge an appraisal fee, which is a big cost savings to all our borrowers. I walk every property because I want to do the loan and we want to keep lending and we don't want to nickel and dime everyone.
Cool. You kind of talked about this, but maybe expand on it a little bit. What are you looking for when you go look at that property that you're going to lend on?
Yeah, so I'm looking for a few things. First of all, I always look at the structure of the house. I look for things that borrowers might miss, foundation issues, termites, like systems that people oftentimes miss and don't know how to evaluate. And then I look at, okay, what makes sense? Like, talk me through what's your plan. Oh, I actually don't think in this neighborhood you need to open up the wall. Or I think it would really help if you do, there might be ways for you to take this one really large bathroom and make it into a bath and a half to add a lot of extra value to the property. So just kind of talking through the game plan, making sure their budget aligns with everything I'm seeing, and hopefully getting it approved.
Awesome. You guys talk a lot about your tribe. Can you talk about what a tribe is?
Yeah, so I mean, a tribe is going to be repeat borrowers that are going to be, we're growing with them. So they're going to be growing their business from maybe 2 rental properties to 35 rental properties in the next 4 years, and we want to be a partner with them. So our tribe is somebody that we hold very close to us, because we are understanding that they're going to go through some growing pains, and we want to create the value and help them go through those growing pains. Because we are local investors ourselves, some of us have been through those growing pains, right? So you don't need to pay the cost of mistakes. Let us help you with that.
Yeah. So what are some of the benefits of being like a member of your tribe?
Well, I think right there says it all. We're going to help you with the growing pains that you're going to have because we've seen things.
Yeah.
We constantly referring people to the banks that we trust for long-term financing.
Yeah.
We have exterior contractors, plumbers. I mean, we have resources that we can share with people that we use ourselves, and I think that's going to be the big part of that. And then also, getting things done on a timely fashion. And when things go wrong, because a lot of times in an investment deal, you don't have a real estate agent involved, and you've never done this before, we're kind of playing the counselor and the mediator and everything else for our tribe members.
Awesome. Have you ever helped any of your tribe members find a deal?
Yeah, absolutely. Yes. Constantly.
That's a pretty big benefit right there. Yeah. Holy smokes.
Yeah.
Yeah, we know that sometimes just finding the deal can be the hardest thing for people. So we're constantly networking, with our internal team that has deals, as well as other wholesalers in town so that they don't, and sometimes borrowers actually stumble upon their own deals, but it's not in their area, it's not really what they want, so then we can connect other borrowers to help them buy it, and just kind of always focusing on win-win situations all around.
Awesome. Is there anything else that I didn't ask you that you wanted to let everybody know about hard money lenders?
I mean, to me, I don't like the word hard money. It's the easiest money I've ever received, right? So
easy money lenders.
Yeah, it's, or going back to everything's common sense when it comes to that because it's based off the asset base. And you know, for the people out in our area that are looking for hard money lenders, I would ask them the question of how many houses have you taken back? Because we are a company that doesn't want to take back the house because that means it's not a win-win situation. I know there's hard monies out there that their goal is to take back that house, right? That's not the kind of hard money company you want to deal with. Talk to the ones that have not taken a lot back, right? Because there's going to be a reason for that.
Yeah. So what do you guys think the difference is between like a regular hard money lender and what a lot of people refer as like a private lender? Can you explain the difference?
Yeah, go ahead.
Yeah, so a hard money lender, they're going to be a professional business that probably has a team around to support them. This is what they do for a living. They've probably got a lot of access to capital. A private lender is going to be typically a friend or a family member who maybe has, you know, 20,000 to maybe 100 or 200,000, whatever that number might be for them, to lend out, but they're not going to be super familiar necessarily with the process of providing a loan, that loan paperwork, what title companies need, because it's not their business. Another difference is that a hard money lender is, like we talked about earlier, they're going to be the ones that are there to like really vet the deal. Do the numbers make sense? Are you going to win on the property? A private lender is probably lending to you just based off of your trust and your character, and they're probably not going to know anything about real estate. So they're going to say, cool, you need, you know, $75,000 to purchase this house. That's what you're looking for. Let me cut you a check, and you can move on. The third big difference is that your private lender is going to be tapped out on capital. I kind of mentioned that earlier, but they're going to have a limited resource pool, whereas a hard money lender is going to have a lot more access to funds. So a great way to kind of combine those two resources if you have them. Private money also is typically cheaper. So typically you're accessing that money at a lower rate than the hard money because the private money individual doesn't have the overhead that a hard money lender is going to have. So if you want to kind of strategically use those two to lower your costs as much as possible, but also be able to do more deals. Something that I love to see borrowers do is when they borrow the purchase money from a hard money lender, and then they're using the private funds to fund the rehab. It's going to make their private money lender feel a lot safer, and it's going to make the borrower feel safer because they know they've had someone quality vet their deal. And then what they're able to do is, let's say they still have excess private money left, then as they kind of get that rehab started, they can go back to the hard money lender and say, hey, I'm already halfway through this project, I've got another deal, and I've still got extra resources to pay for another rehab. And you're able to just scale a lot faster if you're able to use both those resources.
Nice, nice. Can you guys talk a little bit about if you're in an area and you don't know anybody there and you're trying to find and vet a hard money lender, so how would you find them and how would you, like, what kind of questions would you ask them to decide if they're a hard money lender you want to work with?
Yeah, I think there's a few questions I would ask, you know, so of course ask, what are they lending up to, right? Most hard money lenders are going to lend up to a certain percentage of the after repair value. So we need to know what that is, what we're dealing with here. Number two is, what are your fees, right? What is the cost associated with this loan? Because there's always a cost associated with it. And number three, and we've talked about this, but how many houses have you taken back? Because I think that is a huge red flag right there if they've taken back so many houses, because that means they're not lending on the right house. And they may know that. So it's either they may know that and their goal is to take it back, or they don't know what they're doing.
Yeah.
So I think those are going to be probably my main three questions I would ask.
I think that's good. And back to the fee one for just a sec. I've heard you guys talk about this before where your fees are pretty right out there and open. You know, your interest rate, your origination fee, and then you got a doc prep fee. Yep. I've heard a lot of other people say that there's a lot of hidden fees.
Yep.
Do you know what the other people's hidden fees are, and how would you find out if they have hidden fees or not?
I would ask up front for a fee breakdown. I want to know every single fee you have that you're going to charge me. And what you'll see is, you know, oftentimes there's an appraisal fee. There's people call it a bunch of different things, but typically there's a fee to like prepare your loan. There's a fee to close your loan. There's the fee for the loan docs. There's a fee for wiring, flood cert. There's going to be servicing fees potentially. There might be monthly servicing fees that they charge that aren't included in your...
It's almost like some people sit around thinking, what kind of fee can we come up with here?
Yeah.
What else can we charge them? Did they email me?
Yeah, people literally can be feed to death on these loans. So really digging into, and we don't have like a bazillion fees. So we have a really simple sheet we can just send to people right away. And if they send it to you right away, that's probably a good sign. It means they're going to be open about it. If they're hesitant and they're pushing back, that would be a red flag for me.
All right, if you enjoyed this video, make sure you like it and subscribe so you get notified on upcoming ones. And we have a contest going on. So comment on the video below and you'll be entered into a contest we have going on that you're gonna really like.
And if you want more information on that contest, just read the description below and you'll find all those details there.
And our hard money lender knows more about this than me.